Hello and welcome to a CMS Forex Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, May 27, 2010. Overnight, currency markets saw risk appetite and risk on trades perform better. Here, the euro dollar rallied from testing its 4-year low around 1.2150, which we had mentioned was the very important support level to look out for. We rallied above 1.23 and then retraced some of those gains. The European session until we had a second leg in which the euro rose even higher to the 1.2370 area, moving above its medium-term and long-term moving averages in the 1-hour time frame. That came close to testing the highs that we had seen for the week as well. The news that helped to spark the rally was the denial from China's foreign exchange regulator that it was reviewing its holdings of Eurozone assets and debt. That was a direct rebuttal to a Wednesday Financial Times report that said that China was considering selling some of its Eurozone holdings. While the rally helped the euro hold its support at 1.2150, the lingering sovereign debt situation, as well as concerns about bank credit risk, plus austerity measures that will impact growth, still all line up as factors that should pressure the euro in the medium term. On the plus side, the advantage of the euro dropping to where it is now is that it will continue to support the recovery in that it will help to make European exports cheaper, which should help Eurozone manufacturers, automakers, and capital goods producers. Also, the fiscal discipline that comes as a condition of the rescue package from the southern European states will also benefit European economies after the initial pain of government spending cuts and tax increases is filtered through. But overall, traders and investors will bid up equities in Asia, Europe, and in the US, and we did see this risk appetite in today's session. If we draw a Fibonacci retracement of our most recent downswing from around 1.2650 to 1.2150, we see that today's move rose to a 38.2% retracement, and our next levels would be at 1.24 and also at 1.2450, which are 50 and 61.8% retracements of this downswing. With investors' fears soothed overnight and European equities surging higher, we saw the pound-dollar pair also rally, and it moved above its recent 2-week-long resistance at the 1.45 level. We did test 1.4585 and paired a lot of our gains until we retested our cluster of moving averages just above the 1.44 area, and in the New York morning session we saw the pair yet again rally higher, moving back above this old level of resistance and trading around 1.4550 as of 12 p.m. Eastern. So we'll see if this momentum carries us forward to end the week, and as we had very sharp sell-off throughout the end of April and May, let me get rid of some of these lines here. We can see that there's a lot of room for the pound to rally if we have a further retracement of this full downswing from around 1.55. If we draw a Fibonacci retracement, we see that today's move is just barely moves above the 23.6% retracement of this full downswing. So we have the level here around 38.2, which coincides with around 1.47, as well as the 50% at 1.49 to still test. Though for the most part, this should be our next level of visual resistance as well at the 1.47 level, as it means we retest this level of support that was broken and see if we can test it as resistance. This type of setup is apparent in a lot of currency pairs, as we had our fear-induced flight to the greenback throughout the end of April and May, and we have seen some consolidation the last 2 weeks in sideways trading, and now perhaps investors feel that they may want to correct further this downswing. A lot of that will depend on if equities and commodity prices continue to move higher and we don't have any other risk-inducing events, primarily now focusing from the Eurozone area. The Australian dollar US dollar pair we see had a very similar sell-off during most of May, especially as investors flee the higher risk assets such as the Australian dollar. But here too, like I said, we have a lot of room to retrace if we see some positive investor sentiment, with our main level of support here, 0.87, that was broken and now should be retested as resistance in the near future. Today we saw the pair, after testing our short-term and medium-term moving averages around the 0.82 level just to start the Asian session. We rallied all the way up above our recent resistance for this pair at 0.8350. And we also moved above our 200 period moving average, testing the 84.60 level around noon New York time. So our break out of this trading range that we had seen for the past 5 sessions is a positive sign for the Australian dollar, as well as other commodity currencies. Here's a look at another one of our commodity currency pairs, the US dollar, Canadian dollar. And in yesterday's broadcast, we had mentioned how the 1.0550 level will be a very important level of support. And we did manage to move below that and test our 200 period moving average, which we moved below as well. Here we could take a look at our rally from 1.01 up to 1.0850. And we see that the 1.0550 area was actually our 38.2% retracement of this full up move, while currently we find some support at the 50% retracement at the 1.0487 level. If we move below that, our next level of support will be 1.04, which was our old level of resistance back here in May 17th, and would prove to be an important support on this downswing of this pair. With equities higher in Asia and European trading, the US Dow Jones Index actually opened with a 200-point gain, and so that helped to rally risk sentiment in the New York session. And as we can see, the dollar-yen pair, after finding its support here at 88.90, extended its gains from the Tuesday session, and now moved above its recent resistance at 90.50. Currently, we test the 200 period moving average at the 90.80 level, and to the upside, our next level of resistance will come here at the 91.80 area. So if this positive risk sentiment stays, as I mentioned before, there is room for a lot of these currency pairs to make up some of the gains, some of their losses from the last month or so. Turning now to some fundamental data. In the US, we had 2 releases, the second version of GDP, as well as weekly jobless claims. First, let's take a look at the GDP data, where we saw the second version show a 3.0% increase in annualized terms, which was lower than the advance estimate of 3.2% and also lower than forecasts, which had seen the figure rising compared to the advance. The reason for the downward revision was smaller figures in terms of consumer spending, business fixed investment, and net exports. The number would have been worse if not for an upward revision to inventory investment. Still, despite the weaker revision, the US is currently posting the best growth out of all the G7 nations, and especially considering the Eurozone, you should see higher growth going forward, which should be positive for interest rate differentials in the future. In our second report, jobless claims for the week ending May 22nd dipped by 14,000 to 460,000. The market was looking for a stronger improvement than that, but claims continue to move sideways, as we can tell from this chart to the right, and in the past several months. So the 4-week moving average is actually now trending rather sideways after this downward trend that we had seen starting in April of 2009, and that hit a bottom around February. Continuing claims, on the other hand, fell slightly more than the market anticipated to 4.6 million from 4.65 million. We're going to get our monthly jobs data in next Friday, so the Fed will be watching those figures closely. Taking a look at the releases that will end this week, tonight we're going to get consumer confidence data from the UK, and then the end of the month releases from Japan, including household spending and retail sales, consumer price indexes, both the national and Tokyo region, as well as the unemployment rate. Overnight, we get data on import prices from Germany, trade balance from Switzerland, and the KFO economic barometer from Switzerland as well. Tomorrow in the US, we'll get data on personal income and spending, core PCE price index, the Chicago PMI, as well as the UMich, the final version of the UMich consumer sentiment for May. From Canada, we get figures on its current account. And that will wrap up today's broadcast. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.